Welcome to Fear and Greed, the week ahead. This is where we take a look at the big events, reports and releases coming up this week that give insight into the economy and a look back at what happened last week too. I'm Sean Aylmer, and every Monday I'm joined for the week ahead by economist Stephen Koukoulas. You'll find him at thekouk.com and on Twitter using the handle thekouk, Thekouk. Stephen, good morning.
Good morning, Sean.
Stephen, let's kick off. There's three big pieces of news over the last week. One was labour force, the other was sentiment, and the third is what's happening with inflation in the US.
Yeah, look, it was a number that was lower than market expectations in terms of employment, fell 46,000. The unemployment rate spiked to 5.2%. Participation rate also rose. So people sort of think, oh, gee, isn't this a bad number? But in fact, when you analyse what the Bureau of Statistics said about the number, the survey was conducted in the period up to 9 October. New South Wales was still in lockdown. Victoria and the ACT certainly were. So these numbers reflect the full extent of the lockdown. So there was no employment response as the lockdown ends. So we'll see those improving labour market numbers in the months ahead. But basically they didn't really add a lot to the debate at all. We're more likely to be seeing the effects of the ending of the lockdowns in the monthly employment numbers in the next few months, not in the one that we saw last week.
Okay, so just before we jump into the US, the National Australia Bank Business Conditions and Westpac Consumer Sentiment Indexes, people are happier.
Businesses certainly are, yes. The NAB survey had business confidence, conditions, trading conditions, the employment outlook, all spiking higher. Again, that's an expectations type response. So they're seeing the end of the lockdowns as a reason to ramp up their hiring and profitability and trading conditions. So that was a good bit of news, and consumers too. Not as high as it was 12 months ago when the first round of COVID ended, but nonetheless, consumers are still feeling pretty good. And with, hey, the stock market doing well, house prices going up, who wouldn't be happy?
Stephen, the inflation figures in the US last week, they kind of shocked markets a bit.
To be frank, they were shocking. They were truly shocking. We had the headline inflation number at 6.2% annual, the highest since 1990 when Paul Volcker was trying to squeeze inflation out of the US economy, which he did very well, by the way. And even the core readings, because a lot of the increase was petrol prices and oil and these sorts of things. But even the core reading of inflation was 4.6% in annual terms. Again, that was the highest in about 30 years too. So there's this debate that it's been going on for a few months now. Is this spike in inflation transitory? Some of the effects of the COVID crisis on supply chains and these sorts of things, or is there something more sort of entrenched, I suppose, in the inflation numbers? And this number is telling me that it's a little bit more entrenched. Temporary's temporary, and we've now got, I think it's 5 months where the annual inflation reading's been well above 4%. And again, as we said, just 6%. And there's no signs at all that it's starting to come off. So the market sort of got a bit spooked about that, where there's an assessment, well, should the Fed be hiking? Certainly ending their quantitative easing on the back of what looks to be something a little more permanent than just this temporary spike in prices.
We talked a little bit about this on the Saturday show, the concept that what the Fed does in monetary policy is kind of exported to other parts of the world.
Indeed, the US is still the dominant economy, and financial markets are, of course, the biggest in the world. And what happens there does have a huge influence on the rest of the world. So in a funny way, if we look around other major central banks, so the ECB in Europe, the Bank of England, Bank of Canada, our own RBA here, they've been holding off rate hikes, even though markets have been pricing them in and sort of prodding them to go. The Bank of England was a case in point a week or two ago when they held rates steady, when the consensus in the market is that they would hike and hike early. So, what happens in the Fed will be really important for global markets. And it's a really important signal too for currency markets. We know our own RBA would prefer the Aussie dollar to be a little bit weaker than stronger. And if the Fed hikes, that should push the US dollar higher and our own Aussie dollar lows. That's good news. But there does come a point even in that you can have too much of a good thing. And if the Aussie dollar were to weaken on the back of early and reasonably aggressive Fed hikes, the RBA would have to do something about that. And that is, of course, follow the lead and hike rates accordingly.
Well, that's last week. We'll be back in a moment and get into the week ahead. I'm with economist Stephen Koukoulas, a.k.a. The Kouk. So, Stephen, what have we got in the next few days? The Reserve Bank board minutes tomorrow?
Yeah, the minutes tomorrow, they'll actually be quite interesting because that was the meeting 2 weeks ago where they ended their bond targeting, the April 2024 bond, the 0.1%, which they let go, so to speak, and that bond yield has subsequently spiked to around about 1%. So that was on the back of the higher inflation numbers, the better economic news, the end of lockdown. So that was something that we will be reading closely in the minutes, but also just their take on the economy. As we've just been discussing, the job ads and job vacancies market is strong. The business confidence numbers are strong. Housing is still going gangbusters in terms of prices. So there's a lot of things that we'll be digesting just from the board minutes to see what their take on the economy is. Of course, they said there's no rate hikes coming in the next couple of years, so it'll be interesting to see if they put much flesh on the bones of that comment from Governor Lowe a couple of weeks ago.
And Governor Lowe is also speaking this week, so maybe he might get asked that very same question.
And the topic of his speech is inflation. So he's clearly alert to the issues that are going on, not just domestically with the inflation numbers, but also globally, as we were just discussing about the US inflation rate. So it'll be interesting to see whether they've updated and adjusted their forecast for inflation on the basis of what we're actually seeing. Hard news that inflation's higher rather than lower.
What I find interesting, the Reserve Bank only talks when it has something to say. So therefore,
Yes.
Whatever Phil Lowe says this week will be interesting one way or another.
That's exactly right, Sean. Look, one of the Reserve Bank could speak every day. I'm sure they get dozens of invitations to speak at various events. So the fact that he said, yes, I'll come out of my Martin Place bunker and I'll talk about inflation is telling me, and will be telling the markets, that he does have something material to say.
And then the wage price index measure is out this week.
Yeah, that's out on Wednesday. The discussion about higher wages growth is yet to show up in the hard and official data. We've got plenty of anecdotes that there's a skills shortage, firms are outbidding each other, they're poaching their competitors' staff, and wages are going up. This might show the first hints that that's occurring, because until now, wages growth has been pretty low. So again, like the inflation story, like the interest rate story, we'll be looking at these wages numbers for just a hint whether these anecdotes are turning into hard data.
Given that there's not actually a lot of information out this week, it's going to be really interesting still.
Oh, it is. It is. And again, just this focus on anecdotes or, in fact, hard evidence from some of the, I might call it second tier data, but if you look at what Seek and Indeed and these sorts of labour hire and labour advertising companies produce each week, there's a couple of really interesting little data points that just pop up every now and then that show how the number of job ads, job vacancies, skilled vacancies, these sorts of things are out there. They're actually the things that a lot of us are focusing on as we try to get a handle on whether this demand for labour is, again, just a temporary thing or a bit of a knee-jerk reaction to the end of lockdowns, or whether there's something more important there that does spill over into these high wage claims that we think are starting to unwind.
Stephen, have a great week.
Thank you, Sean.
That was economist Stephen Koukoulas, better known as The Kouk. You can find him at thekouk.com and follow him on Twitter using the handle The Kouk. I'm Sean Aylmer, and this is Fear and Greed, the week ahead.